Hey everybody, my name is Joe Bladdock and thanks for joining Sam and I today on our mortgage video. We hope that you're going to find it really educational and also informative to help you with your research and whatever you're doing with your mortgage. So let me introduce Sam here today. Sam is a mortgage agent with Mega Mortgage here with us in Simcoe County, serving Barrie, Aurelia, and we also serve all of Ontario. Welcome, Sam.
Thank you, Joe. Thanks for the introduction, and of course, to pass it back to you. We are being hosted today by Joe Bladdock, who again is a mortgage broker in the Barrie Simcoe area. It's been my pleasure to join the team for the last about a year now. So yeah, excited for today's video.
Thanks very much, Sam. And I'm excited today, too. Today, we're going to be talking about an article that came out last week about how Canadians deserve better in terms of interest rates from alternative lenders. And it's some alternative lenders that I've heard about in the industry. So, Sam, let's get started. Looking at this here, we have this article from CBC. As you can see, it's pretty negative article right off the bat, talking about outrageous interest rates. I've never really experienced clients of ours telling us that we offer them outrageous interest rates. However, let's take a look at what they're talking about here. All right, so here we got Cash Money. We've heard of Cash Money before. Fairstone Financial, which actually used to be City Financial in Canada. For any of you who do not know, they just changed their name. And then we have Easy Financial here, which a lot of you are probably familiar with and have seen other of their brands like Easy Home, and then Money Mart. Let's see what they say. So, Marketplace hidden camera investigation into popular alternative lenders and found that they're charging up to 46.96% interest in an era when the cost of borrowing is at historic lows. That's
Wow,
crazy, Sam, isn't it?
that's great. That is extremely high. Like they're saying, in a contrast to the rates we're experiencing in the mortgage world, and even what a traditional interest rate from a bank would be, it's wildly high.
Exactly. Wildly high. And I mean, look at 46.96%. I mean, what kind of mortgage payment would that give you, really? I just wanted to check that out here. So I'm going to look this up at 46.6%. I mean, obviously, it doesn't really impact people the same way as it does if they are taking a mortgage, because in this case, the interest rate is applied for a smaller sized loan versus the mortgage.
That's right. Yeah.
Awesome. So let's just look at this here. I'll pop in 46.6%, a mortgage of say 400,000 and an interest rate of 46.6%, 96%. So typical home would have a monthly payment of $16,323, which is quite a lot.
That is definitely quite a lot. Yeah.
Yeah. But I mean, looking at the rest of this article here, it's something that because they're for smaller loans, and also, I mean, Money Mart and Cash Money, they're for loans that are for a short period of time. That amount of interest for a short period of time doesn't really seem like that much when you look at the dollar value. If you look at $2,000, for example, at 46.96%, and you divide that over a 2 week period, it works out to $36 on a $2,000 loan. However, if they end up keeping that loan, or if you end up keeping that loan for the full year, then yeah, you're looking at almost $1,000 in interest for borrowing $2,000.
Wow.
I think maybe we should get into the market of payday loans.
That's right.
I'm just kidding, Sam. I would never give these rates to any of our clients here, and I'm sure you wouldn't either. But looking at this, it's something that people need to be aware of.
Mhm.
Yeah. Looking at the article, shows here Marketplace goes undercover with hidden camera. Cash Money, Money Mart have been doing the longer term lending. So I have seen these lines of credit that they're offering at Cash Money. Let's see what they got here. Cash Money, an agent repeatedly expressed the rate as 3.9%, which a colleague later clarified as 46.93% annual interest. It's interesting how it can be represented like that. And it's hard to know what you're getting from a place that offers payday loans and smaller loans like this. But if you are looking for advice, I would suggest the first place, if you're looking for a loan, would not be to turn to Fairstone or Easy Financial, Cash Money, or Money Mart, because there are better options available. Sam, what would you say people should do? Say if they own a house, maybe they can do something else where they can find the money they need for whatever they need.
Yeah, absolutely. I mean, especially with the low rates that we have today's market, we actually are seeing a lot of people actually refinancing their
Yeah.
mortgage and consolidating debt. Or again, if it is an expense that is a need directly related to the house where they need that cash, they're able to do a refinance and borrow those extra funds. Again, capitalizing on the low rates that we're seeing in the market.
That's right. And if we look at what that amount will be over a biweekly period, where we looked at the previous payment was, I think, over $16,000 a month.
Hmm.
If we look at taking out a mortgage, say over a period of 5 years fixed and get a refinance on your home, instead of borrowing the money at 46%, you can borrow it at under 2%, and then you'd be paying 978 weekly. So that's not too bad. Yeah. And then you would have that $400,000 instead of the $16,000 a month, but at the 997 biweekly or around 2,000 a month there.
Hmm.
Awesome.
Definitely a more viable option.
Definitely more viable option and more sustainable option. It's something that when you're setting these financial loans up for yourself to either pay off other debt or to buy yourself some furniture or vehicle or something else or improve your home, it's important to make sure that can you afford it now and can you afford it also if things change, because with COVID and with what's going on, we want to make sure that we leave ourselves the margin to make sure that if we take a loan like this, can we make sure we can pay it? If we can't, that's really going to affect our credit score and make it worse for us to get a future borrowing in the future.
That's right. And it also does bring up an issue that some buyers, aren't necessarily focused on about really using a trusted provider. A lot of the hidden camera, like they were getting multiple responses. So again, I think that's something that we try to put as a top priority in our office is our customer relation and full transparency of what's happening in the process and actually being honest and upfront with the rates that they're expected to receive. And it really does highlight an issue there.
Okay, sounds good, Sam. Well, if anyone has any more questions about it, leave a comment below. Sam and I will get back to you. And if you want to give us a call, perhaps you have some need that you need some funds for a home upgrade or home improvement. Perhaps you need to refinance to pay off a vehicle loan or pay off some other credit card debt. Give Sam or I a call and we'll help you get started a refinance right away. And thanks very much for watching.